welcome back to another video. So in today's video I'm gonna be explaining the whole fractals from basic to advanced. So basically watching this video and all the other videos in the video guides, you're gonna be a zero to hero with the fractals. Okay, starting out, when you open the charts you see a similar chart to this or any other chart you have chosen or must be in there by default. Okay, first of all, I'm going to be explaining how you need to mess with this chart, and then I'll be explaining, okay, how you need to read this chart. So first of all, if you want to change the settings of this chart right here, you are given these three tools: wave, days to load, aggregations. Okay, the aggregations are basically time frames. We have the daily, 60-minute, 30-minute, 15-minute, 5-minute, 1 minute time frame, and we are given the days to load. So this gives me the right that I can choose any amount of days I want so that I can get the better resolution of the data. For example, I want to load 30 days, kind of like a month of data I want to load, so I can load that to actually get the data I want. Okay, then we have the wave. Simple concept of the wave is that the higher the amount of wave we have, the lower the frequency of moves from above and below the pivot we have. Okay, and the lower the amount of wave we have, the higher the frequency of moves we get above and below the pivot. Simple example, let's start with it. For example, wave 10, you can see we have limited amount of transitions above and below the pivot. Am I right? As I load wave 1, you guys can see the magic. See, we have more frequency of moves above and below the pivot. More frequent we see the transitions above and below the pivot. So how will this be useful? Of course, I'm going to be coming all to your questions. I'm going to be covering them all. I know what you must be thinking right now. Okay, now I'm going to be coming to how you need to read this chart right here. Okay, first of all, we have this pivot. I've used the word pivot before. So what does it actually do? So basically, if we are above the pivot, we are gonna be tuned bullish. We are below the pivot, we are tuned bearish. As simple as that, nothing complicated. Okay, and you must be seeing this purple line right here. So basically, this is the vector. We are above the vector, we are bullish. It's gonna work as support. As we are below the vector, it's going to work as a resistance. You guys can see here it worked as a resistance right here. As we resisted from it, the price resisted from this value. Okay, you guys can see here the vector currently is at 480.34, so you can actually mark that out on your charts on bigger time frames. Of course, I'm going to be showing you the bigger time frames too, don't worry about that. Then you must be seeing these black imprints right here. Basically, these are the resistances. If we are above the pivot, it is gonna work as support if you are below the pivot, right? So basically all these imprints are support because like we are below the pivot, right? So basically if we get above the pivot in this particular scenario, we have all the resistance values. So where do these resistance values come from? Basically, previous highs where they reverse from basically forms a black imprint right here or a resistance. Okay, yes, it's gonna be, this is a quite different chart from your linear charts because like we have new session, we have new values, and it's gonna be quite difficult for anyone to understand. It's gonna take minimum of 1 week for actually to just grasp all these concepts. I know it's gonna be difficult, but yeah, you can do it easily. It's no problem, just put in the time. Okay, for example, right here we transition below the pivot, so we formed a black resistive imprint. So this is gonna work as resistance too. Okay, and of course this is gonna also work as a target because like you guys know, the market makers are always taking out highs and lows because the stops are lying over there. So you can take that as a similar concept to this. Okay, okay, now we're going to be talking about this thing right here, which is the macro trend and the standard deviation. This is going to be very useful and very easy to understand. First of all, just understand this shows the frequency of price right here, and understand that if we are in the squeeze, expect an explosive move. I'm gonna repeat it again. If we are in the squeeze, see the cursor. If we are in the squeeze, expect an explosive move. See that explosive move that happened from the squeeze. See this explosive move right here that happened from the squeeze. Perfect. I hope you get that. Okay, it's just simple. It's all simple. Now the macro trend right here. So this macro trend basically shows the market tuning. So basically you can see that we have the red macro trend right now. So it's basically telling me that, okay, Raghav, the market is tuned bearish. So look for bearish targets, look for bearish trades. As simple as that. For example, here we were basically tuned bullish. We had green macro. So it was telling me that, Raghav, look for bullish trades, look for call options on QQQ. Okay. And this doesn't mean that in the red macro trend we can get bullish move, but it definitely tells you that we are gonna get more aggressive move to the downside when we have red macro, and same is for green macro, that we can see downside, but it does not mean that we are gonna have really explosive moves, because like all the explosive moves all the time are gonna be in the bullish side, or you can say above the pivot. Right here you can see how bullish move this was, and also how explosive it was. And we saw that on Monday. Yeah, Monday was pretty nice. This was of 17th, I believe. Yeah. Okay, great. So basically, now I'm going to be talking about the next, which is the probable band right here. Yeah, this is very useful. This can be used also as a target, or you can use to find out the probability of reversal. So let's start with it. Simple example. I'm going to be explaining this with an example that, for example, QQQ transitions below the pivot, right? We can see here we formed the L1 value. We formed the transition below the pivot. Now, what should we look for? Targets, right? We have the first target, 80% band, 479.87. What is the probability we are going to reach that target? 80%. Okay, we break that 80% band, we go below it. What's the next target? Of course, we have these small targets right here, but what's the major target according to the fractals? It's going to be the 50% band, 478.53. Okay, we got below it. Now, what is the next target? We have the 20% band, which means that we have only 20% chance we actually reach that 477.96 price. See how useful this thing can be. For example, you can actually predict reversals in that area. For example, you were at the 10% band. Just imagine the system itself tells you that, see, we have 90% chance of reversal. So, what should you look for? Of course, bullish moves. But like, is it guaranteed? Well, no. We have still have 10% chance that we might see a breakout from here. Then, of course, we have 2% chance, only 2% chance to actually reach that 474.28 target. I hope that cleared a lot of things in your mind about the fractals. You guys saw that how useful this whole tool is. Even if you just use the stuff I just told you right here in this part of the video, you're gonna rock it up with the fractals. You're gonna be able to predict the price, and a lot of new gateways of trading are gonna open in front of you, because like, you were looking at absolutely nothing on your linear charts, because like that is all random, but like this is made up of all mathematics. Nothing is random in mathematics. So basically this tool is the best. If you have got any access to this tool, just consider this yourself very lucky. You should have some kind of gratitude towards God, like, because you were given the best tool to actually trade, and you can actually make out a really good future out of it. Okay, now I'm going to be loading a different time frame. For example, I have loaded the wave 7 right here, 50 days of data, 60-minute aggregation. So basically 1 hour time frame. All right, you can see here. So basically it's the same stuff again. We have the green macro. You can see how explosive the green moves we have. You can use the wave 7 60-minute, wave 1 daily, and the wave 10 15 minute to actually get the weekly moves for you. And you can actually just write that down somewhere because this is going to be pretty useful. Okay, you just use these three data sets and you'll be all good with your trading. Okay, now here, if I just wanted to analyze personally, what do I see? Okay, let me just zoom in a bit. You can see here we actually saw some kind of support from the market, right, from right here, but we rejected from the pivot, we resisted from it. Okay, we actually used the target of 481 point, right here, hold up, 480.87. We rejected from that 480.87 target. Yes, you need to also use the pivot as a target. It's going to be pretty useful, trust me. So basically, we just resisted from the target. Now, what should I expect? Again, the same cycle. Expect the market to reach the 80% band. We break that, go to the 50%. But of course, you need to keep in mind the lower time frames because like the market is supplied the moves with that lower time frame. Okay, of the lower time frame of wave 10 15 minute, and the combination of wave 7 60 minute is gonna be really useful for you guys. Okay, basically, you guys, if you guys want to analyze by yourself, you can now analyze the whole fractals. Of course, just rewind the video again, watch it again. I can actually just give you one more analysis if I want. Okay, let's just do it. Right here, you guys can see that we are rejected from the pivot, right? So basically, the macro trend is still green. So what should I look for? Okay, Raghav, it's telling you, it's just telling you that don't take the bearish moves if you're looking for some kind of weekly 2 to 3 days trade, because we have the whole macro trend green, right? So we're gonna see more aggressive green moves rather than red moves. So basically, the market is overall tuned bullish. Am I right? Well, yes. Also, we are in the squeeze, so basically, we can expect an explosive move that will be great for us, right? And that bearish or bullish move is not decided by that standard deviation squeeze, because like we don't know about it. Okay, of course we can see a bearish expand, then the macro trend might change. Like in this situation right here, we saw the bearish squeeze, the macro trend changed, and of course it then transitioned for a bit when we saw an explosive move to the upside. But of course then we saw consistency in our macro trend. So you guys can see I just analyzed for you guys once again. Now try to analyze, just use this chart right here. Just try to analyze yourself what I just told you guys, and then make out what you need to look at and how you'll be looking at the market using this too.